Hey everybody, welcome to this video. This is Smoleny from Wolftrader Futures, and this is a market update for January the 27th, 2021. So today we saw some heavy selling on the S&P, and I just want to kind of give you a background on this in terms of what do I think is going on and what can we expect going forward. So first of all, the S&P today, I had this in a medium and a long-term up still because you had the Planetary Speed Index here on the 21st was in a buy, and you also had the Fed juice here yesterday went into a buy, and then it just proceeded to go against both of them today. Now these are long and medium term indicators. These are not next day indicators. So this still tells me that there's still a push to the upside for this market, and I still think there's a good chance that this will try to bounce and come back first before it heads lower, if it does head lower from here. Okay. So that's the first thing. So the medium and the long term is still up. Okay, it is still up. And the dollar juice is still up also. Okay, so this market kind of fell out today, and I think it's related to the Mercury retrograde. So for those of you who follow astrology, you know that we have this Mercury retrograde coming up on the 30th, and so we're just a few days away. Now, a lot of times when you have the Mercury retrograde, what happens with this is that Mercury is making a station, and almost every single market crash that's ever happened has happened within 3 days of the Mercury retrograde. So we're within 3 days of that. Now, when this type of a crash happens on a retrograde, a lot of times it's just about some type of a technical thing going on, or data flow is not going through, or systems freezing up, things like that. Now, these types of situations are common in crashes, but I will say this, that usually the markets just don't fall out of the sky like this when you have both of these buy signals into here like this. So yesterday we had both of those in a buy, okay, which was the medium and the long term. I didn't have a next day signal for today, but and the RSI wasn't even that high, guys. The RSI was it was like 60 something. It wasn't even that high. I'm trying to go down here to see what it was, but it really wasn't even that high. It was 65.6, and the threshold is, it's like 64. Okay, so it was barely in a sell on the RSI. It was technically in a sell on the RSI. You can see here when it gets to 64. So this number that I'm looking for is here. This is the 64. So when it gets above 64, it starts to put downside pressure on the S&P, but it was not excessive. It wasn't like the RSI was 80 or 90%. It was only, it was only 66% at the high here. So normally this has been turning at 73, 80, 81, 74, 79. It's usually been pushing up into the 70s and the 80s before it turns. But this time it just turned on a 66, which is a little bit odd to me because you had both of these still in this buy here. So I just want to point that out first of all. Okay, so I'm going to go over here to the Fear and Greed Index. I'm going to talk a little bit about this. Now, also on my own personal level here, you have to understand that when the market was making the lows in March of 2020, and I came out and said that the Fed was going to turn this around and we were going to make all-time highs, the aggression level towards me from investors, people that I talked to, was so high because they were absolutely convinced that the market was going to crash in March of 2020, and people were coming at me and getting super like a snarling dog at me, okay? Like when I would even hint at the fact that the market could recover from that March 2020 low. Okay, so I got some similar responses today when I was talking to some investors. They were just like, "Oh, this is it. It's going down. It's going to crash. Just get out of the way. This is finally it." And so I kind of got that sentiment from people again. They were just so sure that this was the end of the line for the S&P. So I'm not so convinced yet. I'm open to the fact that this could sell off, and I'm going to give you the scenario and outline that. But we got to understand something here, guys. The Fed is going to come tomorrow like you will not believe, and they're going to come on Friday like you will not believe. So understand that, guys. These are very real things here. This is not just, I'm going to cut interest rates and we're going to go down to 0%. This is an active Fed coming in. This is an active quantitative easing period. The Fed is going to be pissed off tomorrow. I'm just telling you this right now, okay? So, keep that in mind, okay? So the fear and greed index also here. The fear and greed index is it's pushing down to 39%, which is low. It's fear. So there's definitely fear now in the market. And we had, like I said, this 1 day sell-off, which I think is related to the Mercury retrograde. I think this is more of like a technical kind of freezing up, of order flow, of just the motion is freezing up. I'm not convinced yet, though, that this is going to keep going straight down, simply because usually when we have these types of big, big, big crashes that people are, talking about, you have both of these in a cell, right? And we don't have that right now. We don't have that. And so I just want to point that out. So I'm going to take you back a little bit here just to show you what happened during COVID, just to give you an idea that, you know, when we do get a sustained type of a crash, which, by the way, this could happen in the next 2 weeks. I'm not saying the market can't crash in the next 2 weeks, but what I'm saying is typically there's some type of an orderly progression of this stuff. So like back here in February, before COVID, we had the Planetary Speed Index in a cell here. We had the Fed juice in a cell, and then it starts to sell off, right? When these both were pointed down, then you start to get these big waterfall type sell-offs, okay? Then you start to get all of these bigger sell-offs here when they're both agreeing here. This was the biggest agreement here back into March. We don't have that right now. I believe in these signals, and I've showed you how they've done. The Planetary Speed Index has beat the S&P for 2020, and the Fed juice has essentially tied the S&P for 2020. These are very powerful indicators. Okay, so they're not just arrows on a chart just to throw them up there. These are powerful trading systems, both of these. So we got to take these seriously. And the fact that the market went against both of these, to me, is it's suspicious. It's suspicious to say the least. Now, a lot of times the market will come down. If these are both up, it'll come down, bounce up, and then it'll give these time to turn into a sell, and then it can head lower. If it is going to head lower, I'm not convinced of that. I know what the Fed is capable of. I know what Jerome Powell is going to do tomorrow. I know what Janet Yellen is going to do. They're going to come at this market tomorrow with so much stimulus. They're going to be purchasing bonds. They're going to be throwing everything at this market tomorrow. So I'm just telling you, if you have any chance at this market going down, usually it has to be with these two guys agreeing to the downside. So I'm just going to put that out there. I know a lot of people are snarling and getting crazy, and this is it, and this is the end of the world. I'm not convinced, okay? And I'm going to get into some other things about tomorrow. I think the next day, tomorrow, definitely is a positive day on the market, and it could extend into Friday. If the Fed really, really wants to push this hard, they could push it into Friday easily, guys. So this could retrace a lot of this damage very quickly. So I just want to put that out there. Don't get it in your head, the lizard reptile part of your brain that wants to go to the Armageddon scenario all the time. Get that out of your head for a second. Understand that the Fed is here, the Fed is real, and they're going to come like absolutely bonkers tomorrow, guys. I'm just telling you, they came very strong today, and they got beat. They got beaten at 3 o'clock. The selling accelerated, like we talked about. But this is still in a buy. This is still in a buy. And when that happens, and the next day, by the way, I'm going to talk about that in a minute. Tomorrow, I have a next day up. I haven't put the next day up in a while, the next day signal in a while. Tomorrow is a next day up. There's everything lining up green across the board tomorrow. So if we're going to bounce, this is a very, very good scenario for a bounce tomorrow. Okay. So I just want to throw that out there to you. Now, one more thing before we leave the screen. Planetary Speed Index makes a sell on 129. Okay. So that's Friday. Today's Wednesday. So if this goes up into Friday, possible high on Friday. But guys, it is very possible that the Fed goes ape shit tomorrow and starts just completely throwing the sink at this thing tomorrow. Okay. And this could just careen all the way back. It could careen back up to new highs. It's very possible. So what I'm telling you is keep an open mind to both possibilities. I have my bias, obviously, with the Fed. I believe in what the Fed does. I see what they do every day. But don't just let that reptile part of your brain take over and say the end of the world is here. Because believe me when I tell you, in March of 2020, when everyone was talking about the end of the world, I said, they're not going to let this thing go down, okay? So I just want to point that out, that keep an open mind about this, okay? So that's what I want to say about that. All right, guys, so I'm coming back to this chart, and I just want to make one correction here. This should actually say on this chart, next day up, medium term up, long term up. There was a little bit of confusion today at the close. The Fed just flipped. It was a buy, it flipped sell, and it flipped back into a buy. It's in a buy still. Okay, so this is still in a buy. This is still in a buy up. Okay, now that's important. Okay, that's really important, guys. So the market just doesn't decide to just ignore these signals on the fly like this, okay? There's a good chance this is going to try to play back out or try to resolve some type of a bounce tomorrow. Now, dollar juice, guys, dollar juice is still in a buy. So I've got both the Fed juice and the dollar juice in a buy. This is still in a buy here since 122. So if you look down here, this is still in a buy, still in a buy. Okay, now this is not factoring in the Fed, but it's still in a buy. Now, here's the thing. Let's talk about the next day scenarios. The market has a very strong tendency to reverse the day after the Fed meeting. I've studied this, I've done statistical runs on this. So that's a very important thing to consider tomorrow because it's giving us some odds in our favor that there's going to be a bounce just from that fact alone. Just the fact that today was a Fed meeting says that the market could try and reverse tomorrow. So that's just something to consider, about the next day scenario. And also the daily statistics tomorrow are positive, very positive for the S&P. The RSI is extremely oversold. So I'll go back here to the RSI. RSI here, just so you can see this, is down to 25. 25. Okay, so this is where we are today. It was 25. That's really, really low, guys. So, even if you think that this thing is going to keep heading lower, you're going to get some type of a dead cat bounce off of this. If it's heading lower, I'm not convinced yet, guys. And we will get to that on Friday. If I feel like, hey, look, the Fed juice is in a sell, the Planetary Speed Index is in a sell, it's possible. But the Fed is going to come tomorrow, guys. I'm just telling you. I'm just telling you. So keep an open mind both ways on this. Look at the previous lows here, 38, 37. Okay, the last big low that we had into here was it was like in the low 20s. It was like 20. Look at these lows into here. And these were major lows, by the way, that I'm going to show you here. These were major lows. So the last few ones here, this is back in this is September and this is October. So take a look at these. These are big lows here, 24, 22.6. So what do we see today? We saw 25. So we saw this is a signature of an RSI bottom, guys. If you see RSIs that are low like that and they stay low, usually that happens when you have a downtrending market. But we don't have a downtrending market. We have an uptrending market. So for it to fall that quick to 25, to me, that's telling me, hey, short term, it's got some upside RSI pressure now, big time. Like this is at an extreme level right now for the S&P 500 in terms of an extreme level. So just something to think about there. All right, so there's another one here I want to talk to you about. The bond, because this is another example where everybody was hooting and hollering about how this bond was just going to keep going down and interest rates were going up. And I kept telling you guys, no, the Fed is buying the bonds. And so when this RSI got down to this 5.9% on this bond, I was like, there's no way the Fed is coming in. And this thing has rallied all the way back up, right back into the channel. You see this bond here? So a lot of times when things look very dire and the Fed is involved, it can reverse and completely retrace on these things. So, guys, I keep going back to this concept of the reptilian brain, but I know it's so hard sometimes when that fear gets into the market and you say, oh my God, this is just, it's going to crash. If there was no Fed, guys, I would say, hey, look, anything is possible. This thing could continue down, but there is a Fed. There is a Fed, and the Fed is very strong. So, they're going to be in tomorrow. They're going to be in Friday, and they're going to be coming strong. I can pretty much guarantee you that based off of their past behavior. Okay, so what I'm going to do is I'm going to talk to you about S&P in terms of the statistics, the next day statistics. Guys, there's so much positive energy tomorrow on this on the short term that I will be shocked if this thing does not bounce tomorrow. Okay, so first of all, the RSI, if you look here, the RSI is positive. It's in a buy. And I will put an asterisk next to this, okay? It's at an extreme level. It's at 25, okay? Next one, microcycle, up tomorrow. Okay. Next one, alpha omega cycle, up tomorrow. Now, tomorrow is the strongest statistical day of the week for the S&P, Thursday. Okay. Here you go, Thursday. And it's also the second big day for the S&P, the second big day for the S&P. So just keep that in mind, that you have these statistics here. The CAD Masters in a buy. The Planetary Speed Index is in a buy. The dollar juice is in a buy. The Fed juice is in a buy. So essentially, the market just went against all of these today. So I strongly feel that this market is going to bounce tomorrow. I think there's a very strong chance. Now, for those of you who know, we have a platinum service where we track an indicator called the Fast Fed 2.7. The Fast Fed 2.7 is a trading system that we use that actually has, targets, limits, and stops. And this thing has done very well in the S&P in 2 months. Okay, it's done very well. It's only taken like 3 losing trades in 3 months. Okay, and it's up well over 400 points in 2 months. This just went into a buy today at the close. Okay, so this was not in a position. We had a short position which we had covered, but the signal was short all the way until today at the close, and then this went into a buy today at the close. So the Fast Fed 2.7, we're long on this. We're actually long on the S&P at the close today based on the Fast Fed 2.7. So I just wanted to point that out, that you have so many things right now pointing to a buy or at least some type of a short-term bounce, that I will be very surprised if this S&P just keeps going straight down tomorrow. I'll be very surprised. Okay, so just keep that in mind. This Fast Fed 2.7 has been tremendous. So I'm just going to come over here and show you this Fast Fed 2.7. These are the actual trades that have happened on the Platinum service since November the 9th here. This is up 451 points in a little bit over 2 months on the S&P. Okay, you've had the number of losing trades here. You've had a total of 14 trades here, so it doesn't trade that often. It's a swing system, but you've had only 1, 2, 3 losing trades here. That's it, the whole time, and this went long today at the close. So for me, when I see all of this energy lining up, I see the Fast Fed making a buy, I see the Fed juice in a buy, I see the Planetary Speed Index in a buy, I see tomorrow's the strongest day of the week, I see the RSIs at an extreme. To me, this is screaming, and I know the Fed's going to come in strong tomorrow. To me, this is screaming bounce tomorrow. I mean, you couldn't have more indicators saying that there's some type of a short-term bounce coming than you have right now on this market. So just wanted to point that out. All right, so now I want to talk to you about the raw Fed juice. So this is another one here that's surging on this S&P. Now, here's the thing though. I did bring this up to you earlier. We don't know to what effect these emergency lending facilities have had on the S&P. So to be fair about this, it is possible that by shutting these emergency lending facilities down, we're starting to see the effects now of the S&P. It's essentially right back to where it was when they shut down the emergency lending facilities. So is that enough to be causing the S&P to sell off? It could be contributing to this for sure. Like today, for example, when the wheels fell off on this market, the corporate credit bonds started going crazy. All of these facilities that they had in place weren't there, right? So when you had a mini crisis like you had today, the Fed couldn't respond to it like they normally do, right? So that's probably why we continue to see the selling today after this. But I do want to point something out to you. The Fed is still in a period of active quantitative easing. That is still going on, guys. And you can see here they're in a phase where they're surging the juice higher. The bond purchase, everything's going higher here. So to me, when I see this surging, you almost never see the market falling into the surging juice here. So this to me is telling me that behind the scenes, they're ramping and ramping and ramping and ramping and ramping, and tomorrow and Friday is probably going to be even stronger. So at some point, guys, if they could stop it back in March of 2020 down here, do you think they're worried about today? They're not worried about it. They're not worried about it. So I know that it sucks that it made such a big counter move in one day against the signals, but keep in mind, guys, that, and the Fed is they're not even using the amount of stimulus they were using back here during COVID. So there's a lot more the Fed can do. They have a lot more firepower to come at this market. So they're nowhere near tapped out. They're nowhere even close to being tapped out on this. So just keep that in mind too. that I monitor the relative levels of what they've been doing, and it's still pretty low compared to what we were seeing back in COVID. So the Fed can stop this just like they stopped the bond. They can stop the selling. They can stop the bleeding whenever they want. And I'm telling you, be careful about this. Don't assume that the market just has to go straight down. I mean, could it go straight down? I guess it could, guys. Anything is possible. Today happened, right? Today happened against the signals. So I'm keeping an open mind to the sense that, yes, anything is possible, but based on my experience, based on the signals, based on everything I'm seeing, this is definitely not over yet, and don't think that this has to go straight down, particularly tomorrow, particularly the day after a Fed meeting, particularly with the fast Fed and a buy, particularly with the Fed use and a buy, particularly with the Planetary Speed Index and a buy, particularly with the extreme RSI. I mean, you have pretty much every single possible buy signal on this market right now that you could possibly imagine. So at least on the short term, I think you have a chance here to see some type of a bounce here. Now, when we get out to Friday on the 29th, I'm going to really have to evaluate this to see what's going on, because my guess is that they're going to keep coming and coming and coming like this at this market. They're going to keep throwing everything at it, and eventually, and they're going to keep doing it until it stops going down. So here's the problem. If we get to the 29th and the Planetary Speed Index is in a sell, but the Fed is still going like this, like this, like this, like this, like this, and the market has turned up, they may compensate for the negative transits coming up. It's very possible, because they're coming stronger and stronger and stronger every day. So just understand that this is a tug of war. Today, the astro, the transits, the Saturn Uranus stuff won out, but in the long run, the Fed comes every day. Now, Saturn Uranus, guys. So Saturn Uranus. So just so you know, this is coming on the 17th, and I have been talking to you about this, that the market does not like Saturn Uranus. So just so you know, this type of a transit is a very unpleasant type of a transit. So you have Saturn squaring Uranus here, and this is coming up on 217. Now, the last time this happened was during the 2008 financial crisis. We had Saturn opposition Uranus. Markets don't like this. Saturn is think about Saturn as the Earth, and Uranus comes and disrupts the Earth. So you're just like standing there on the ground, and the ground just literally slips like a slab of rock, just falls beneath your feet, and you're like, like you're on the edge of a cliff, and the cliff just like plunges off, right? It's like sheets of rock just instantly ripping off on you, right? So this is what we kind of saw today, just kind of like everything was there, shit, slipped down just like that. So this is still a signature of the Uranus energy, the Saturn Uranus energy, and this is going to get stronger into February. So this is coming, okay? But the question is now, how is the Fed going to respond today to this? My guess, like I said, Jerome Powell, Janet Yellen, they're going to come at this absolutely with guns blazing. That's my guess. Because remember, Janet Yellen followed in the footsteps of Bernanke, which was, stimulus, helicopter bend. She followed in the footsteps. She's of that mindset, and she was, and Powell was succeeded her. So they worked together. My guess is they're going to be coming hard tomorrow. So that's basically what I have to say about that in terms of the raw Fed use. But they're surging, guys. This is not pulling back; it's surging. If I saw this pulling back, okay, like I did see this pulling back. It was pulling back a little bit into here, but then they started to surge it up again. If I saw this tanking like this, right, then I would say, oh God, this could go down. But that's not what we see. We see the exact opposite. So for the market to fall into that is very odd indeed. So let's say that the Fed fails. So somebody asked me that, what if the Fed fails? What would we see? Well, if the Fed fails, guys, I've never seen it yet. And you can go back here. You can go back through all of these different situations here. Okay, every single one, the markets follow the Fed. Here's what I would have to see here. Okay, I would have to see the Fed continuing to ramp up the juice like this, and the market continuing to fall. Okay, for me to say this stuff doesn't work anymore, right? But we've never seen that. So if that's going to start failing, if the Fed's going to start to fail, it's going to take a while. It's going to be like, okay, the Fed's ramping, the market goes down, it goes up, the market goes down, it would have to look something like this, right? and the Fed would have to be going higher and higher and higher and higher, higher, and eventually the market stops responding. That's not what we see. We don't see anything close to that. We see the market still responding almost lockstep to the Fed. So I don't see a Fed that has lost control of this market in any sense of the word. So I just want to put that out there, that that's the scenario that I would have to see for me to lose faith in this, the Fed juice, basically, in terms of what they're doing. And so they have a long way to go. We're nowhere near that situation yet, as far as I can see. And I track this stuff every day, guys. So from what I see, we're nowhere near that. All right, guys, so just to come back here and summarize again, back here on this one-day chart. So this S&P is already rising, just it kind of dipped down, but it's already rising back up here. Just to summarize here, I still think we have every reason to believe that this market's going to try to make some type of a bounce into here. The RSI is at extreme levels. The Fed juice is in a buy. The Planetary Speed Index is in a buy. All of these signals that I outlined, the daily statistics, the fast Fed is in a buy. I think there's every reason to think that this market's going to try to make a bounce from here. And then as we get out into Friday, what I'll do is I'll try to give you like a little more detailed update into what I think on Friday. That's really what I see as a possible, possible top. If the Fed just goes into a sell, if the Planetary Speed Index is in a sell at that point, then, it's possible we could start to look for a longer downtrend in this market. But as long as the Fed is really, really slamming it like they are, and we'll see tomorrow what happens if they are able to push this back up. I still think there's a very good chance this could rally right back up, just like we saw with the bond as I showed you in that pink chart. So anyway, so that's what I wanted to say about this. So we'll keep watching this, and I'll definitely keep you updated. But these are interesting times we live in for sure. But I definitely believe in these indicators. They have not failed me. They've been consistent, and I believe in them, and I believe in what the Fed is doing. And I watch them every day, guys, and I feel confident about what they're doing. Is very stimulative to this market still. So that's my basic opinion on that. But again, like I said, I'll keep you posted. And when Friday rolls around, I will give you a little bit more of a detailed update there on what I think could be happening with this. If the Fed is really, really coming in, just surging and surging and surging into Friday, Friday might not be such a good candidate for a top if the Fed is just absolutely going crazy in this next couple of days. So I will keep you posted. So hope everybody has a great night. Thanks for watching so much, and I will talk to you soon. Peace out.